Good morning, everyone, and welcome to the Quantum Leap Thursday Leap session for April the 4th, April the 5th, 2013. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market. And then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. Nobody can tell you what the market's going to do. Therefore, we wait for the market to show us who's in control, and then we execute the hypotheses or the scenario or the trade plan, whatever you want to call it, that best suits the market. We create two main hypotheses for our two main hypos, and then we create two alternative hypos that are our expansion days. And boy, have we been seeing a lot of hypo 3s and hypo 4s kick in, and we're going to talk about that today. Before I do that, this is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. With that said, let's just take a quick look at the news, get that out of the way. We did have initial jobless claims at 8:30, came out at 242 versus 225, so it was a miss there. Continuing jobless claims was lower though at 1808, and then we had trade balance was minus 57.6 billion versus 56.9 billion, which is a miss. And then we had Canadian trade balance at minus 2.669 billion versus expected minus 2.1 billion. We have Bloomberg confidence coming in at 9:45 in 57 minutes. That's the big news of the day, really, other than at 1 o'clock we've got Bostic from the Fed speaking. So light business news, but of course there's all kinds of headline news, and certainly a very volatile market that we're seeing so far. Reviewing yesterday. Yesterday, we were looking for a open auction just out of range, a move up into the 86 to 91 area, and then we were looking for a rotation down and a push down through to the daily ATR down here, which is down at the was at the 25.50 and a quarter area. We talked about the fact that our over underline was going to be 25.77.75. Above that, we were looking to the longs, and if we got above the key line in the sand, the 86.75, that put us back into value. We were targeting that balance in the value up here at the 26.13 and possibly a move up to take out the TPO single at 21. So we were still thinking hypo 1, okay, until we failed to get back below the key line in the sand. After that, it was all longs, and we talked about that in the room, that anything above that level, actually I said I would not look short until we got back below the 25.77.75. That's what the over underline is all about. The key line in the sands, those are our clues to start shifting to our hypos, our alternative hypos. And of course, our hypo 4 was a take back day and a move back up into this 8-day microcomposite VPOC, or the most traded price in the last 8 days at the 26.13, and a possible push up into the 21. Did not expect the continuation to go as high as it did, but the order flow was not telling us at all that we should short this at all. We did get a VPOC shift into the close. Anytime you get a trend day or a neutral extreme day that the VPOC shifts up into the close and you close near the highs, you can see this is a weak high. You're looking for continuation in the Globex. And what did we get overnight? Kind of, excuse me, coughing and clearing my throat. I'm still dealing with this cough. In the overnight session, we opened auction in range, went down right to the VPOC that shifted up into the close to 26.44, chopped, fighting that high from yesterday at 49.75, and then we broke out and we pushed up and continued the auction higher. Our overnight high is 67. We're trading 62 and 62 right now. We're 100 points plus, okay, off of the low from yesterday. The Globex low last night was at 59.50. What a take back. This is a very strong market. Cancel the crash. Inventory is, pretty much 100% net long in time and price. I say it's more like 90%, but let's face it, we're opening up. We're going to gap up today. I am expecting a pause day as my main hypothesis. And I will talk about the two hypos, hypo 1 and hypo 2, that fit to a balanced day after a take back day. But before we do that, let's just step back, as I always like to do. And this saved my butt yesterday in terms of, I went into yesterday, pretty much with a short bias, and my bias shifted very quickly, and that's because I pay attention to the bigger picture. So what I do each day is I take a simple candlestick chart. I use a 9 EMA, I use a 20 SMA, and I start with a monthly, and I work my way down in the macro time frame to the micro time frame to see where are we in relationship to the different time frames as far as trending. We've got a huge trend still, 14 months of one time framing up. We violated in February. We have an inside month in March, and it looked like we were possibly, challenging the trend. We were, breaking below the 9 EMA, but we've popped right back up. The trend is intact on the monthly. Okay, nothing has changed. We do not violate this trend on the monthly, the longer time frame, until we get down into the mid 2400s, and we're now back up in the mid 2600s. So there's lots of room, okay, for movement without the sky is falling and the high is in, and the trend has changed. Now on the weekly, we're getting a bit of a different picture. Okay, we're getting this consolidation, but we're below the 9 and the 20. So we still have the possibility of a downward trend, but does that mean it can't come up into the 2695 or into the 2700s again and then continue lower? Yeah. Personally, as I've been saying, we still have a lot of repair work to do above. And if we can get back into the 2700s, I'm still targeting, believe it or not, that unequalized high up at the 2883 and a quarter and 2880 and a quarter, which is the two Globex all-time high and the RTH all-time high. I mean, obviously that's way up there, so I'm not getting ahead of myself, but even though, the weekly and the daily, if you looked at the daily, look what happened to the daily. We were trending down. We got a FUBAR Mr. Sneaky. And what do? We get a technical gap fill against the 9. And, so far today, we're getting continuation up. So this, this trend down is being challenged now, okay, with the break above the 9 EMA. If we get above the 2689 and a quarter area, then we're violating this, what was the start of a downward trend, and we could see the continuation of where we were moving up and the continuation of the monthly trend. Going to the intraday 4-hour. Same thing as the daily picture. We were looking at the stair stepping down and this downward trend that we've been in, for the last, few sessions. And what happens is we take it right back. We got slope and separation to the upside. We do have a bit of a technical gap, so a move back down to the 2641 would not be surprising today. And we do have a naked cross right here at the 2609. I mean, our daily ATR, our full session average true range 20 period, is running now above 50 points, 50.53 points. So there is lots of room to move in this market. Going to the, so don't, just don't get your bias on, especially with this volatility and the fact that the average rotations, the average harmonic rotations in the last week or so has climbed above 10 points. Going to the 30-minute, you can see that we were in this, this downward trend. Fubar Mr. Sneaky. Okay, pay attention to that setup. We rotate all the way up and we start this trend, and now we're leveling out. I'm expecting a rotational day with a bit of a downside bias to start, and then for them to base and start working their way up. And we're going to be probably trading from the outside in for the most part today. So let's take a look at the structure of the market. So we fall out of this balance up here. We break down. We create this 6 days of balance where we're trying to hold value at the 2614. Then we have that big breakdown on Monday. They come down, and what do? They come all the way down to the bigger picture value area low. Okay, and then bounce, get an inside day, and then you get the take back day in the continuation. And now we're coming back up into this value area right here, which was the value that we gapped down after putting in the all-time highs. We gap down and we create this value area with the value at 74, 2774 and 2633.50. We're back inside of that. We're back inside of the smaller now 9-day microcomposite. We've accepted the 1350 VPOC, and now we're coming up and we've broken out of the value of the 9 days and clearly back inside the longer time frame value with that VPOC all the way up at the 2719 area, 1950 area. We do have some prior price acceptance here at the 2682.75 and the 2666.75, and more importantly, the open of the year, okay, is now only about 14 points away. The open of the year, 2675.75. So, are they going to continue to push up and try to get us into a positive year? It's possible. Levels to pay attention to today. You want to watch this 52 to 54 area. I'm using 50, I think I'm using 53.50, but you've got a CLVN, okay, at 52.50, and you've got the value area high for this 9 days at the 53.75, 54 area. So if we can stay above that, we're likely going to chop, okay, inside of this profile day right here, which was our breakdown day, and mature the auction here in around the year open. If we fall through and get back into the value from the last 9 days, look for them to come down and get back inside and come back into this 2644. That's going to be my main hypo I'm looking for a rotation down into the 44, possibly even the 41, maybe even the 32 area. This is going to be my key line in the sand below. If we get below that, then we're falling back out of this value, and we could get a trip back down into that 1350, 1375, which is the balance back in this value area that runs from the 53 down to the 25, 85, 50. So taking that, looking at the overnight, we've got very good kurtosis around the 2659. For the most part, we've bounced off of it on the news, and we're holding. Pretty good distribution. Our overnight high is our week high and our month high at 67. Our low for the night is our VPOC from the shift of the VPOC into the close yesterday, and we got a couple LVNs at the 50, 52 area, but because of the value area, I've shifted my trade area up to the 54. If we open up, we're right here. We're going to be opening up outside of range, outside of value. So we are going to have a gap, and let's say we open at 60, 60, 50, and our close yesterday was 47 and a quarter. So our half gap fill is 53.75. Now I'll have to adjust that, but you can see it's going to be right around this trade area. So I'm just going to use this trade area. Now I'll put a different line because I'll probably have to move it. But right now it's going to be right sitting on top of this trade area. And again, this will be adjusted on the open. Okay, let's talk. I've got all my levels in here. So my key line in the sand is 32. My over under is going to be 49.75. Pretty simple thought process in that. It's the range high. If we get back into the range, I'm looking for a move down into the overnight low and the naked VPOC and the naked close, and a possible push down into this 40 area or down here further into the 35 area to 32 area to challenge the month and the week open. So let's talk about hypotheses. Inventory is net long, so I'm looking for an open auction out of range. I'm looking for a move down into the 53.50, and somewhere between the 53.50 and 49, I'm going to be looking for a possible rotation up into the overnight high and taking out the overnight high and chopping, but I'm expecting it to just chop between the 49 and the 75 and just go sideways as a breakout day. That is hypo 1. Equally weighted, and I want to strongly suggest to you that either one of these scenarios have just as much possibility. Equally weighted, hypo 2 is an open auction out of range, a push up, take out the overnight high and the month high, and possibly even push to test this 75 to 78 area, then finding responsive sellers, rotating us down, testing the range, filling the half gap, okay, chopping here, and then pushing down into the 44 and possibly even a late day probe, but basing down here and coming back up and closing outside of yesterday's range. So that is hypo 1 and hypo 2, equally weighted. We want to see where is the impulse wave after we get through the market on open orders in the opening swing. So pay attention today of your opening swing. Of course, we're going to gap up, so gap rules are going to be in play, and hypo 3 is going to be a gap and go day and a open test drive. Possibly come down, fill the gap, but leaving the range high from the prior day alone and pushing up into the year open, chopping up here in the 75 to 78 area, and then pushing up, breaking above the key line in the sand above, which is at 2684.50, and pushing up into the 2690 area, 91 to 94 area, possibly a late day probe to come back up into that gap zone, okay, that is above and up here. And the mid of that gap is 2705. And then finding sellers and coming back down and closing somewhere in the 80s. That is hypo 3, gap and go day. I'm not expecting a ton of range, but you have to be aware of the fact that we've got these huge average true range right now. So we've been seeing a lot of hypo 3s and hypo 4s. Let's talk about hypo 4. Hypo 4 is an open auction out of range, a failure to get above the year open, strong selling coming in, bring us down into the 44, push down into the 32 area, break below the month and the week, and break that key line in the sand and push down into that 9-day balance that we've been in the 2613.50 and coming down and testing the daily ATR. You know, it wouldn't surprise me if we get a 60 to 70 point move back down, the way we've seen these ranges run in the last couple days. Those are my 4 main hypotheses. Pay attention, okay? Don't get stubborn in this market, and watch to see, with the average range of, the average rotation. If you look at the average rotations, let me just go do that quickly. The average rotations are maintaining that 9 and 10 area. So it's nothing for them to rotate at 7, 8, 9, 10 points. So you just got to widen your stops out, decrease your unit size, and take small bites out of this market, and don't get stubborn or caught in a singular bias to the upside or the downside. That's going to be the ES, taking a quick look at gold with this move up in the indices. Gold has fallen off a bit. We've come. Let me just bring this in. We've come right back down to the longer time frame balance. This should actually be moved to here. Longer time frame balance, 1329. We're right back there. And we're right back to those 2 key areas that we've been talking about when we were trading in this area, is this 1990, which was in the March contract, was the 14. That's our key line in the sand below, and this 41 area, 40 to 41 area above. Likely to see a lot more chop in this distribution. If we get above 35, target is 37.60. A possible trip to the other side of that balance, 41. Any breakout of the 41, look for the 44 to 45 area, possibly even the other side of that balance at the 13.50. If we hold in this area and 29 doesn't hold, look for them to push down into the 26 and possibly see a VPOC shift in this from this 29 to the 26 if we put off some volume down here. Anything below the 19, we're looking for that move back and down to test the lower 1300s and possibly come back to the composite VPOC. That is the most traded price going back to October of 2008, down at the 1290.80. So that's going to complete our pre-market session. As always, own your trades, okay? Don't get stubborn. This market is very volatile, but it gives you a lot of opportunities if you just keep it tight and keep it light. Anyway, have a great day. As always, trade well, trade safe, and we'll catch you on the flip side.